If you're a firefighter, EMT, cop, or nurse, you already know the system isn't built to make life easy. And when you try to buy a home, the lending world quietly stacks the deck with hidden fees that can cost you thousands of dollars.
Here's all my documents. What can we do? I don't want to miss the house.
Yeah, the situation is really difficult. Let's run some numbers and see what we can do.
I've sat across from first responders who trusted their lender and walked away with a deal that was flat out wrong. And I take this personally, not just because I'm a first responder, but because I've seen families lose money they should never have paid. And it's happening because of one pricing rule lenders rarely ever explain. Here's the kicker. It's not just about knowing the rule. The real question is, why don't lenders lead with it? And more importantly, if they won't tell you, how do you force them to show you the truth? Why do two people with the same job, same credit score, and the same payment end up with totally different mortgage rates? The quick answer is hidden fees called loan level price adjustments. But here's the bigger question. If those fees are standard, then why do some buyers skip over them entirely? Here's the trick. If you're a first-time buyer and your qualifying income is under your country's area median income, those risk and fees can be reduced or waived. That's thousands of dollars in savings before you even talk about points or credit. So why don't lenders start here? Why push you towards paying points or taking a higher interest rate instead? Let's make it real. An EMT buying a $360,000 home with a 3% down might see about $3,500 in added fees backed into their loan. But under the AMI rule, that fee can drop to a flat zero. Sounds like an easy win, right? But what if FHA is cheaper? And why do so many first responders get pushed into FHA by default? Yes, I'm not bashing FHA. As you guys know, I really do love it. I think it's one of the best loan products. So FHA can be great if your credit is low or your savings are tight. But FHA mortgage insurance often sticks with us for the life of the loan. With conventional loans, PMI can be canceled once you hit 20% equity inside of the home. So if you can unlock a conventional loan with great pricing without the risk and the fees, your long-term cost is lower and your options are better. So the next big question is, how do you actually check if you qualify? Step one, look up your country's area median income. It takes 2 minutes and you can do it by the zip code. Step two, check the income your lender actually uses. Overtime counts to your income if you can show a year or more of history. If you're under the limit and you meet the first-time buyer definition, the door is open. But knowing you qualify is one good thing. Getting your lender to admit it on paper is a whole nother subject. So what do you actually say to them so the lender can tell you the truth? Here's where most first responders lose money. They skip the AMI check and accept the wrong price sheet. They let the lenders default them into lender paid PMI without knowing the trade-off. They pay discount points even though they'll move or refi before even breaking even. They assume overtime won't count when it often does. They ignore the state or union assistant programs that could stack on top of the programs you're already getting, such as if you're a police officer, we have a PBA discount that will allow you to save money on your lawyer or your attorney's fees. And you can use that with whatever promos the attorney's already running. Now, when you're sitting across from the lender, here's what you say. Number one, am I being priced under the affordable first-time home buyer program for my income and area? Yes or no? Do I qualify for any current programs, credits? If not, show me which guidelines I don't meet. And number three, price. Can you price this both ways? Can you price it FHA and conventional, just so I can compare the two options. If they hesitate on any of these questions, that's your answer. That's your answer right there. A pro loan officer, a pro lender would be like, yeah, no problem. Here's the math. Here's FHA. Here's conventional. This is why we should do it. And they should cite the guidelines like, hey, yes, you could use a down payment assistance program, but if you do that, your rate's going to be this, and that's not going to be overall help you with your overall goal of, I don't know, saving more money or whatever your goals are. But a pro lender is going to be able to show you this stuff, and they're going to be able to answer your questions. If they start hesitating again, I don't know, something's not right. I want you to put your radars up. So why don't we, yes, I'm a lender, so why don't lenders tell you this up front? It's simple, because the industry makes more when you don't know. They get to charge points, they can give you higher rates, they can do unnecessary deals, and it all pads what they call a margin. The trick isn't a loophole, it's the official pricing path. But unless you bring it up, you'll never see most of this stuff. Not all lenders are like me. So this is what I've done. I've built a free mortgage map for first responders. It walks you through how to do the AMI lookup, the eligibility checklist, and a simple template to compare loan estimates side by side. And you can grab it at the link below, Keys for Heroes, or you can text me AMI to 631-817-HOME. Once again, text AMI to 631-817-HOME, and I'll send it to you directly. You serve your community. You serve them every day. You deserve a fair deal on your mortgage. Start with the right pricing sheet and ask the right questions. And keep more of your money where it belongs, with your family.